Hello everyone. Now there's the last lecture of final accounts. Question 7 is the last question remaining from final accounts. Understand the things properly, and obviously if you want you can try the question on your own also after we do the markings, and you can play the video and check whether your answer is correct or not. The following information has been extracted from the books of Mira Limited as at 31st March 2020. Cash in hand, cash and cash equivalents, repairs and maintenance, miscellaneous expenses, raw material at cost, closing stock. 31st March means closing stock. So inventories, plant and machinery, tangible fixed asset, land, tangible fixed asset, furniture, tangible fixed asset, sundry debtors, trade receivables, finished goods at cost. 1419 means opening stock, so change in inventories. Raw material consumed, C, consumption of raw materials. Building, tangible fixed assets. Salaries and wages and bonus, employees benefit, E. Rent, administrative expense, A. Prepaid expenses, prepaid expense will be short-term loans and advances, STLA. Power, miscellaneous expense, M. Traveling and conveyance, selling expense, S. Auditors fees, administrative expense, A. Cash at bank, cash and cash equivalent, CCE. Staff advances, short-term loans and advances, STLA. Now income tax advances, be attentive. 1819 means last year, 1920 means current year. Current year's advance tax will come in short-term loans and advances. And last year's advance tax, if you remember, we discussed, it has to be compared with gross tax liability. Okay, question number 2 we discussed. After that, writing as a note, you all can see this second note. I made you write this after question 2. Last year's advance tax should be compared with gross tax liability. If gross tax liability is more than the difference amount will be shown as tax payable in other current liabilities. If advance tax is more than the difference amount will be shown as tax refund receivable in other current assets. Here 70,000 is last year's advance tax, and look at adjustment 6. Okay, we compare these two. Advance tax is 70,000 and income tax assessment for year 1819 has been completed, fixing the income tax liability at 1,55,000. Now last year we paid advance tax of 70,000 and tax liability has come to 1,55,000. So tax payable of difference amount, 1,55,000 is our liability, minus last year we already paid 70,000 in advance. Difference amount 85,000 will come as tax payable in other current liabilities. Okay, difference amount 85,000 will come as tax payable in other current liabilities. 70,000 is not to be recorded. Okay, no effect for 70,000. We have discussed this exactly same thing in question 2, that last year's advance tax has to be compared with gross tax liability. Here gross tax liability is more, so difference amount will be shown as tax payable in other current liabilities. In case if difference amount is less, means tax liability was not 1,55,000 but 55,000. We have already paid more advance tax. Then the difference of 15,000 would appear as tax refund receivable in other current assets. Further, current year's amount will come in short-term loans and advances. Miscellaneous expense M. Dividend of last year paid you will minus in statement of retained earnings as an appropriations. Same way, dividend distribution tax, DDT also we will minus from statement of retained earnings as an appropriation. APP means appropriation. Share capital will come in share capital. General reserve will come in reserves and surplus. Sundry creditors will come in trade payables. Sales will come in revenue from operations. Development reserve will come in reserves and surplus. Cash credit from bank is a short-term borrowing. Advances from customers, we have received the advance from customer, is also a short-term borrowing. We have done this earlier. Okay. Provision for tax. Now exactly same thing for provision for tax. What did we discuss? See that third note I made you write. Last year's provision for tax be compared with again gross tax liability. Here if gross tax liability is more, then shortfall means last year we provided less tax. So shortfall will be deducted in statement of retained earnings. And if provision for tax is more, then we had created excess amount in last year. Excess amount will be added in statement of retained earnings. Here provision for tax is again to be compared with gross tax liability 1,10,000 against that 1,55,000. So 1,55,000 minus 1,10,000, there is a shortfall of 45,000. Okay, what is this 45,000? It is a shortfall. Okay, instead of that, if it was 55,000 and we created 1,10,000, then that would have been surplus of 55,000. Here it is a shortfall. Shortfall we will further minus in statement of retained earnings, and we will provide that shortfall from current year's profits. Therefore, in statement of retained earnings, we will minus this shortfall of 45,000. Had it been 55,000, then in statement of retained earnings, you would have added. Okay. So this 1,10,000 also will have no effect. This 70,000 also will have no effect. Both of them are to be compared with income tax liability of last year. If tax liability is more than advance tax, show it as tax payable in other current liability. And if it is less, then refund receivable in other current assets. Same way, if tax liability is more than provision for tax, then shortfall we will minus in statement of retained earnings. If provision for tax is more than the surplus, we will add in statement of retained earnings. I hope everyone is clear with that. Miscellaneous income, other incomes, profit and loss accounts, balance on 1/4/19 will come in statement of retained earnings. Authorized capital of the company is 80,000 equity shares of 10 each, that is disclosure. So in share capital, all of you mark it as D. D stands for disclosure, of which 50% has been issued and fully called up and paid up. So 50% of 80,000, 40,000, that is what is given in trial balance. 40,000 shares of 10 each, 4 lakhs. That will write as issued, subscribed and paid up capital. Dividend of 15% on paid up capital has been recommended by the directors. Paid up capital in trial balance is 4 lakhs. So we will count this 15% on 4 lakhs. That will be 60,000. And provide DDT of 20.56%. That 20.56% we will count on 60,000. That 20.56% we will count on dividend of 60,000. That comes to 12336, 12,336. Okay, both these amounts, DDT and dividend amount, will come in footnotes. Okay, as a contingent liability and commitment. Closing stock of finished goods will come in change in inventories and also inventories. Development rebate reserve is no longer required. So we will withdraw it from P&L account, means we will add it in statement of retained earnings, and it is no longer required. So this effect is not to be given. It will not come in reserves and surplus because it is no longer required. Okay, it is no longer required. So it will not come now in reserves and surplus. Earlier we were going to write it in reserves and surplus, but since it is no longer required, now it will not come in reserves and surplus. It is not required, so no effect is further to be given. I hope everyone is clear with that. Next, provide for current year taxation 25.75% minus from profit before tax and short-term provisions. Bills receivable of 3,000 are maturing after 31st March 2020 was discounted. Footnote, contingent liability. Okay, after 31st March 2020, make it 31st March. That means they are going to mature in the next year. And in the next year, if our debtor does not pay the money, then we will have to pay the money. So it is an uncertain liability. We may have to pay the money, we may not have to pay the money. We have to pay the money only if our debtors don't pay the money to the bank. So it is going to appear as contingent liability and commitments in footnotes. You are required to prepare profit and loss account for the year ended 31st March 2020 and balance sheet. Pause the video and make the format of profit and loss statement and balance sheet, everyone. And then after that, I'll start making the notes. All of you pause the video and make the formats of profit and loss statement and balance sheet. Let us solve the notes now, be attentive. First note will be share capital. Now in share capital, very first we'll write authorized capital. Authorized capital, all of you can see, is given in adjustment 1. 80,000 equity shares of rupees 10 each. All of you write on authorized capital, 80,000 equity shares of rupees 10 each. So total amount will be 8 lakhs. We will double underline. Okay, you all know by now what is the relevance of double underlining. It is not to be included in the total of balance sheet. Then we will have issued, subscribed and paid up capital. Now, issued, subscribed and paid up capital we get from trial balance. This share capital of 4 lakhs. Okay, which is given in adjustment when 50% is subscribed. So 80,000 is 50%, 40,000, and even if you do 4 lakhs divided by 10, you'll get 40,000. So 40,000 equity shares of rupees 10 each. That comes to 4 lakhs. Total also will be 4 lakhs. Then second note will be reserves and surplus. Now, reserves and surplus, general reserve is there 1 lakh. So all of you write on general reserve 1 lakh. Then after general reserve, development rebate reserve we did mark, but it is not required, so now it will not appear in reserves and surplus. And normally we subtract the reserves from statement of retained earnings, but here since it is not required, we are going to add it in statement of retained earnings. When we come to statement of retained earnings, we will see that. Okay, there is no other item of reserves and surplus, so we will leave space for that profit and loss account that we will get when we make statement of retained earnings. So profit and loss account we will obtain from working note 1. Okay, you leave space for the totals. Then third, after reserves and surplus, we don't have long-term borrowings in the question. Then directly short-term borrowings. We don't have other non-current liabilities as well as long-term provisions. So directly short-term borrowings. All the STB marked items. Cash credit from bank 12,500 and advances from customers 50,000. Cash credit from bank 12,500 and advances from customers 50,000, total 62,500. Then after short-term borrowings, we will have trade payables. All the items marked as TP. Only one is there, sundry creditors of 3,40,000. Sundry creditors 3,40,000, and that itself will become the total 3,40,000. Then after trade payables, we will have other current liabilities. Okay, we don't have other current liabilities in this question. Do we have any item marked as OCL, other current liability on the credit side of trial balance or adjustments? Okay, we do have income tax payable of 85,000. We have to write in other current liabilities. One adjustment is there. So all of you do write down other current liabilities. In that we will write income tax payable okay, as we obtained 1,55,000 minus we paid advance tax of 70,000. So 85,000 is our other current liability, income tax payable. I hope everyone is clear with this. Then we will have short-term provisions. And short-term provisions, we have only one item, provision for tax. And the amount of that is missing, so we'll keep it pending. And after doing P&L account, we'll be able to get its amount. Then after short-term provisions, we will have tangible fixed assets. TFA marked items, look at it everyone. Plant and machinery 4,73,000. There are no adjustments or depreciation. There is a depreciation adjustment. We forgot to read that adjustment 5. We have to minus from tangible fixed asset as well as, okay, one effect we have to minus from tangible fixed asset, and second effect we are showing depreciation and amortization. All the three tangible fixed assets you could take, there is an adjustment. Okay, so very first plant and machinery, let us write down 4,73,000 in inner column. From that we will subtract depreciation. Now what is the rate of depreciation on plant and machinery? 31.23% per annum. Okay, 31.23% per annum. So all of you do 4,73,000 into 31.23%, 147,718. 147,718. And outer column, if you subtract that, you get 325,282. Okay, 4,73,000 into 31.23%, 147,718, and remaining 325,282. Then after plant and machinery, which is the next tangible fixed asset, we have land. Land of 30,000 is not subject to depreciation. In fact, building you should have put that is subject to depreciation. Okay. So land we will directly write in outer column 30,000. Okay. All of it write on land 30,000 directly in outer column. Then we will have furniture. What is the furniture in inner column? We have to write 13,500. Furniture is 13,500. From that again, less depreciation. Now what is the amount of depreciation rate on furniture? Adjustment 5, 25.89%. Okay, 25.89%. So 13,500 into 25.89%. All of you counted 3,495.15. So 3,495. And if you subtract that, then 10,004 or 5 rupees. 1,000,005. Okay. Then lastly, we will have building. Okay, building is of what value? 77,900. Building is 77,900. From that again, we will subtract depreciation. Now see the rate of depreciation on building in adjustment number 5. 9.5% per annum. Okay, 9.5% per annum. So 77,900 into 9.5%. 7,400.5 means 7,401. 7,401 If you minus that, you'll get 70499. 70499. Now total 70499 plus 1,005 plus 30,000 plus 325,282, that comes to 435,786. 0.59787. 435,787. Okay. Once again, 325,282 plus 30,000 plus 10,005 plus 70499 comes to 435,786. Okay. Then after tangible fixed assets, we don't have intangible fixed assets. We don't have non-current investments. We don't have, okay, you all can see that we don't have intangible fixed assets. We don't have non-current investments. We don't have long-term loans and advances. We don't have other non-current assets. We don't have current investments, directly inventories. Okay, next item is directly inventories. So all of it are down inventories. Now inventories, what all will come? Very first, this raw material at cost, that is 2,67,000. Raw materials closing stock 2,67,000. Raw materials closing stock 2,67,000. Then from the adjustments, we have finished goods closing stock. Adjustment number 3. Finished goods closing stock is 5,60,000, which we will write in inventories. 5,60,000. 5,60,000 plus 2,67,000, that comes to 5 plus 2 7, 8,27,000. Okay. Then after inventories, we will have trade receivables. Look at trade receivables, TR marked items. Sundry debtors 1,40,000. Okay, sundry debtors 1,40,000. That itself is the total. We don't have other items of trade receivables. Then 10th, after trade receivables, we will have cash and cash equivalents. CCE marked items, cash and cash equivalents. In that we will have cash in hand 6,200. Okay, cash in hand 6,200. Then after cash in hand, we will have cash at bank 8,000. Okay, cash at bank 8,000. So total will be 14,200. Then after cash and cash equivalents, we will have short-term loans and advances, STLA marked items. Prepaid expenses, in that 4,600. Prepaid expenses 4,600. Then after prepaid expenses, staff advances 5,300. Okay, staff advances of 5,300. Then after staff advances of 5,300, we have current year's advance tax of 2,30,000. Okay, current year's advance tax of 2,30,000. Then after current year's advance tax of 2,30,000. Okay, no other item is there of short-term loans and advances, neither in adjustments. So total can be done 2,30,000 plus 5,300 plus 4,600. So 2,39,900. Okay, 230, 35, 39, 900. Then after short-term loans and advances, other current assets we don't have. OCA marked items, other current assets, neither in trial balance nor in adjustments. We have footnote. Okay, contingent liabilities are there. So next note will be directly footnote, contingent liabilities and commitments. What all things are marked as footnote in the adjustment? See that. Okay, dividend first of all. 60,000 of dividend, that is proposed dividend 60,000. How did we count that? 4 lakhs 15%. Share capital is 4 lakhs. 15% of that proposed dividend. 4 lakhs of share capital into 15% of proposed dividend 60,000. And then DDT on proposed dividend 60,000 into 20.56%. Okay, 60,000 into 20.56%, it is this one. That comes to 12336. So 12336 will also come in footnotes. Then after that, what other item is marked as footnotes? See that. 8th adjustment. Bills discounted of 3,000 maturing after the balance sheet date will come in footnotes. Okay, 8th adjustment. So bills of 3,000. What we write? Bills discounted with the bank maturing after balance sheet date. 3,000. So 60 plus 12, 72 plus 3, 75,336. Then after contingent liabilities, we will have P&L statements items, revenue from operations. RFO marked items, sales, only one item is there, sales. That is 42,30,000. Sales of 42,30,000. And that itself will become the total. Then 14th, after revenue from operations, we will have other incomes, OI marked items. In that we have miscellaneous income. Okay, only one item is there, miscellaneous income of 54,600. Miscellaneous incomes 54,600, and that itself will become the total. Okay, is it 54,600? Yes. Then after miscellaneous incomes, other incomes, in expenses we have consumption of raw materials or cost of raw materials consumed. It is directly given in the trial balance, raw material consumption. That is 28,60,000. Okay, 28,60,000. And that itself will become the total 28,60,000. And after consumption of raw materials, we will have direct purchases or purchases of stock in trade. I think we don't have. Okay, raw material is there, but purchase of stock in trade, B marked item is not there. So straight away we'll have change in inventories. Okay, direct purchases are not given, so change in inventories. That is opening stock of finished goods minus closing stock of finished goods. See that, everyone? Opening stock of finished goods is 3,10,000. Okay, opening stock of finished goods is 3,10,000. From that we do minus closing stock of finished goods, that is adjustment 3, 5,60,000. We'll minus, so write it in bracket, 5,60,000. So we'll get negative amount. 3,10,000 minus 5,60,000 will be minus 2,50,000. Check it out. 3,10,000 minus 5,60,000 will be minus 2,50,000. Then after change in inventories, we will have employees benefit expenses. Employees benefit expenses, E-marked items, that is salaries, wages and bonus, 11,60,000. Okay, salaries, wages and bonus. Only one item is there. Salaries, wages and bonus, 1,60,000. That itself will become the total. Then after employees benefit expenses, we will have finance cost. F marked items. I think finance cost we don't have. There is no item marked as F, finance cost. Check it up, everyone. Salaries, wages and bonus, 11,60,000. Okay, 1,60,000 I have written by mistake, make it 11,60,000. And after salaries, wages and bonus of 11,60,000, F is not there. Okay, so directly we'll have depreciation and amortization. Depreciation and amortization. D and A marked items, that is adjustment 6. So we'll get directly from tangible fixed assets only. See the note of tangible fixed assets in that 147718 is the depreciation on plant and machinery. 147718 is the depreciation on plant and machinery. Then we have depreciation on furniture, and then we also have depreciation on building. Now what is the depreciation on furniture's amount? See here, 3495. Okay, 3495. And what is the depreciation on buildings amount over here? 7401. Okay, 7401. So total amount of depreciation will come to 147718 plus 3495 plus 7401, that is 158614. Then after depreciation and amortization, we will have other expenses. In other expenses, we will have administrative expenses. Now, A marked items will be taken into consideration. So, what all items are marked as A? Rent, rent of 5,300. Then after rent, which other item is marked as A? Auditor's fees of 1,500. Auditor's fees 1,500. Then after auditor's fees, we have A marked items, we don't have any other. Okay, so two administrative expenses. The total comes to 5,300 plus 1,500, 6,800. Then we will have selling expenses. Now, S marked items, selling expenses, what we have is Traveling and conveyance 4,100. Only one item. Traveling and conveyance 4,100. Total also 4,100. Then after traveling and conveyance, we have miscellaneous expenses. Now M marked items, that is repairs and maintenance of 8,600. Then after repairs and maintenance 8,600, we have power of 8,800. Then any other item marked as M? No, all other items are taken in consideration. No, one more here. Miscellaneous expenses of 13,300. Okay, miscellaneous expenses 13,300. So total will come to 8,600 plus 8,800 plus 13,300, that is 30,700. And final total of all other expenses, that is 30,700 plus 4,100 plus 6,800, that is 41,600. Okay, 30,700 plus 4,100 plus 6,800, that is 41,600. So all the items have been taken into consideration. Now we will record the things in P&L statement and balance sheet. First we make P&L statement. So revenue from operations. Okay, revenue from operations we get from note number 13, 42,30,000. Just check up by chance any item is not missed out, because then a lot of corrections will have to be done. Building, salaries, rent, prepaid, power, traveling, cash. This income tax adjustment is done. Miscellaneous dividend will come in statement of retained earnings. Sales, development, rebate, reserve, miscellaneous income. This will come in statement. First, second adjustment, third, fourth, fifth adjustment, we have recorded these two also. Sixth shortfall will come in statement of retained. This other current liabilities recorded. This is yet to be recorded. Okay, yes, all items have been recorded. So note number, revenue from operations we get from note number 13, 42,30,000. We'll write down note number 13, 42,30,000. Then other incomes will come from note number 14, 54,600. Okay, 54,600. Total will be 42,30,000 plus 54,600, that is 42,84,600. 42,84,600. Then expenses, cost of material consumed we have in note number 15. Cost of materials consumed in note number 15, 28,60,000. 28,60,000. Then direct expenses or direct purchases we don't have. Then change in inventories from note number 16 is a negative amount of 2,50,000. Okay, it's a negative amount. Okay, over there it should be written as a negative amount. Write that in bracket. 2,50,000 is negative amount. Then employees benefit from note number 17, we have employees benefit expenses 11,60,000. Okay, 11,60,000. Then finance cost we don't have. Then depreciation and amortization from note number 18 we have 158614. 158614. Other expenses from note number 19 we have 41,600. Now total 28,60,000 minus 2,50,000 plus 11,60,000 plus 1,58,614 plus 41,600, that is 39,70,214. 39,70,214. Once again do it so that there is no mistake. 28,60,000 minus 2,50,000 plus 11,60,000 plus 158614 plus 41,600, that is 39,70,214. Now profit before tax will be incomes 42,84,600 minus expenses 39,70,214 with 42,84,600 minus 39,70,214, 314,386. Profit before tax is 314,386. Now from that we have to subtract what? Provision for income tax, 25.75%. Okay, 314,386 into 25.75%. Do it everyone. 314,386 into 25.75%, that is 80,954. And if you minus that, then what you will get is 233,432. 233,432. Okay, 3,14,386 into 25.75%, that is 80,954. And if you subtract that, 233,432. Now we will make statement of retained earnings. So working note 1. Statement of retained earnings. Now in that we start with opening balance of profit and loss account. That we will get from trial balance. See that opening balance of P&L account, SRE marked item. Here we have 348,143. 348,143. Now in that we have to add current year's profit after tax. What is the current year's profit after tax? We have to add over here 233,432. 233,432. Further, we are also going to add that adjustments shortfall. No, we have to minus that. Sorry, not that, we have to minus that. Nothing else to be added. So total of these two comes to 348,143 minus, sorry, plus 348,143 plus 233,432, 581,575. 581,575. Now in that we have to minus. What are the things we have to minus? Very first, from trial balance, dividend of last year 40,000. Dividend of last year 40,000. Right in bracket. Then we also have dividend distribution, tax on that. Okay, what is the DDT on last year's dividend? See that in trial balance again. 8143. That also we will minus 8143. Then after dividend distribution tax and statement of retained earnings from trial balance, we don't have anything. Now that adjustment was there for provision for tax, so adjustment number 6, this shortfall, okay, adjustment number 6, this shortfall of 45,000 will minus from statement of retained earnings. So shortfall of provision of tax of last year, shortfall of provision for tax of last year, 45,000 we will provide from current year now, that also we will minus. Okay, there was that development rebate reserve which is to be added, we forgot that. We have this plus in statement of retained earnings. Development rebate reserve, what is the amount of development rebate reserve? 1 lakh, that we have to add in statement of retained earnings. Plus transfer from development rebate reserve. Okay, plus transfer from development rebate reserve. 1 lakh rupees. 1 lakh it is, right? Yes. So 1 lakh further we will add. So instead of 581 it will become 6,81,575. And then from that subtract these amounts. So minus 40,000 minus 8143 minus 45,000. If you subtract these three amounts, what will be remaining is 5,88,432. 5,88,432. Okay, that is balance carried forward to balance sheet. 5,88,432 will be the balance carried forward to balance sheet. Now we'll make the balance sheet items. So pending items first we'll record. This is 5,88,432 now. First 5,88,432, write it in reserves and surplus. 5,88,432. So total will come to 6,88,432. And in provision for tax, we have to show which amount. Here we have got provision for tax of 80,954. So provision for tax will come in short-term provisions 80,954. Yeah, 80,954. Provision for tax in short-term provisions 80,954. And total will also be 80,954. Okay. So all the items have been recorded. Now we take up with the balance sheet, remaining items. Very first note, we get share capital of 4 lakhs. Note number 1, share capital 4 lakhs. Then note number 2, we have reserves and surplus, that is 6,88,432. 6,88,432. Total 10,88,432. Then we don't have long-term borrowings, we don't have other non-current liabilities, we don't have long-term provisions. So total non-current liabilities are nil. Short-term provisions we get from note number 3. Short-term provisions we get from note number 3, that is 62,500. Then trade payables we get from note number 4, that is 3,40,000. Then other current liabilities we get from note number 5, that is 85,000. Then short-term provisions we get from note number 6, that is 80,954. Total 62,500 plus 3,40,000 plus 85,000 plus 80,954, that is 568454. 568454. Now total of balance sheet 568454 plus 1088432, that is 1656886. 1656886. Now asset side, tangible fixed assets will get from note number 7. Tangible fixed assets from note number 7, that is 435786. 435786. Then intangible we don't have. Capital work in progress we don't have. Non-current investments we don't have. Short-term loans and advances we don't have. Other non-current assets we don't have. So total will come to same amount, that is 435786. Current investments we don't have. Inventories from note number 8. Inventories from note number 8, that is 8,27,000. Trade receivables from note number 9, that is 1,40,000. Cash and cash equivalents from note number 10, that is 14,200. Short-term loans and advances from note number 11, that is 2,39,900. Now total 8,27,000 plus 1,40,000 plus 14,200 plus 239,900. That comes to 12,21,000. In that we add 435,786. What we get is 16,56,886. The balance sheet gets tallied. 16,56,886. Okay, here other current assets are also nil. And this 12,21,000 will come in the next line. Okay. Now contingent liabilities and commitments will get from note number 12. That is 75336. Okay, 75336. So with this, all the questions of company final accounts are over. I hope everyone must be confident with that. A lot of practice has been done. Next lecture now will start with a new chapter. Okay, this chapter gets over. That'll be all for this lecture. Bye everyone. Take care. See you in the next lecture.